Welcome again, everyone. Today is March 25th, Saturday. Jim, you're there?
I'm right here, Bill.
Great, loud and clear. We've just got a couple topics we want to talk about. One, obviously, was the non-vote yesterday on Obamacare, and we're going to talk about the ramifications of that. And if you noticed, we put up just a short 2 or 3 line comment on the importance of yesterday, and we'll get into that. The other thing is we also posted an article by John Hathaway, and I urge everyone to at least read it and maybe reread it once or twice afterwards. It was a fabulous article. He really broke it down, nuts and bolts. I wish I had written it. That's all I could say. Was really
reading it. I kind of think you did.
Well, this was. He's been one that would never use the word manipulation.
Yeah.
And he still did not use the word manipulation. But what he did was he talked. And I've got the article loaded here.
Maybe he called it influencation.
No, he talked about paper versus physical.
Yes.
One of the paragraphs is titled "The Selling Was Almost Entirely Synthetic," and he's talking about what happened right after the election, the night of the election.
Yes.
And I'll just read a little bit of so we can get started with it. The question is, where did the sellers come up with 6,200 tons, a preposterously enormous and unprecedented quantity of gold, on a moment's notice in the wee hours following the surprising election outcome? The answer that nothing close to that quantity of gold changed hands in those 4 days. The selling was almost entirely synthetic. I got black helicopters over me. I'm not sure.
They're coming for you?
Yeah.
Oh, there we go.
Okay.
I know it.
The selling was almost entirely synthetic, as there would have been, in our opinion, no possibility that amount of physical gold, or even 10% of that amount, could be mobilized on short notice. Now, let's put this in perspective. Total global production of gold in a year's time is 2,700 tons. China produces roughly 400, so the world produces 2,300 tons in a year's time. Let's call it, round numbers, 200 tons per month. This was 6,200 tons of paper gold sold in 4 days. And that was your $100 drop in gold. Actually, I'd say that was a pretty good showing for gold to have more than 2 years' production sold in 4 days and only drop 8%.
I was only going to make the comment that no matter the size, remember, for every 100 ounces sold, somebody's buying 100, synthetic or real. Well,
it couldn't be real because they couldn't have been real buyers. And the reason they couldn't have been real buyers was because it could not have been real sellers.
Well, remember, you're buying a contract. Contract says it's obligated to give delivery. So what I'm saying is, the guys that played the game on the synthetic side sold it to people who would have a right to turn synthetic into the real stuff if they chose to.
Jim, you were a big or the biggest trader in and around the 1980 spike. So let me ask you this, because you know the ins and outs of trading, and you and I haven't really talked about this aspect of it, but I've even thought about writing an article, but I figured I'd be trolled too badly if I put a public article out like this. What do you say about, okay, so you've got a seller that sells 6,200 tons, and you have either an entity, a shell within that, from that seller, or that seller's best friend or best friends or whatever, and they know that this is going to be sold, and they're standing below the market and buying 6,000 of the 6,200 tons. So they allow the price to get smashed. They know that 95% of what is being sold is never going to come back to bite them as far as demanding delivery.
Basically,
and
wash sale.
They smash the price.
Yeah. Basically, you've just explained very clearly
The wash sale.
the wash sale.
Yeah.
And how that's used continually in the paper gold market to not only make price move, but to create profit on an already put in position and demoralize the long.
And you do it with almost no risk because you know who the other side is. And
well, basically, you're selling it to yourself.
Yeah.
Okay.
Okay. I just wanted to confirm with you that that's been my thought for at least the last 6 months. I mean, I've not written about it or really talked about it, but the way I see it, that's the only way they could do it and not have a surprise demand for delivery.
The method that's used in the commodity is also copied in the common stock as well. It's one of the ways that you can have a significant a waterfall type stock action. It requires a little more risk selling, but it's exactly the same thing.
Now, he also talks about the last 6 months have been the largest reduction in commercial shorts on record. And what he's talking about is the first half you had speculative money, first half of 2016, when gold and the shares were blowing and going higher, saw a lot of speculative money come in, and most of that speculative money has come out. And I'm not sure if you read this recently. Ted Butler came out with an article titled Dead Men Walking. Have you read that,
yes.
Ken?
Yes.
Basically, Ted Butler is saying that in the silver market, it's not specs. The specs are not the longs, and that's the reason that the open interest on silver didn't crash as hard as it has on gold, because you've got buyers, real buyers, that are at some point in time going to demand delivery, laying in wait.
Yes. Well, when it comes to silver, obviously you've got to respect Butler. And silver is not just simply poor man's gold. It's gold on steroids. So taking major positions, in advance of a market reset, in the silver, then transferring that to cash, and then that cash to gold on the first reaction, really would be a heck of a trade, because silver as it begins to go, will eclipse the percentage gain in gold.
Right, by multiples.
And it's also nice to see ever-increasing industrial usages.
Well, yeah, not just industrial. I mean, you've got medicinal, solar, I guess that's industrial. But, yeah, you've got so many, the usage of silver is just blossoming year after year.
An ebullient economy, or even an economy that was recovering somewhat, would be very good for silver.
Well, while we're on this topic of silver, just so our listeners understand, very, very few, I think there's only 4 or 5, basically 100% silver producers. Most silver that comes to market is a byproduct from gold mines, nickel mines, copper mines, zinc, et cetera, et cetera. And in a let's say a deflationary depression scenario, silver won't come to market. No, almost no silver will come to market because as the zinc and the copper and the lead, the industrial metals are no longer mined, that means silver's not going to be mined either.
Correct.
So there's a bottleneck in supply.
Right. And that's, and that knowledge contributes to silver's action.
Yeah, and one other thing to keep in mind is that there are no central banks in the world that hold big stockpiles of silver.
Thank God.
Well, I mean, it's the point being,
harder.
There's a back door out of Fort Knox, and we've seen gold.
Fort Knox is a very interesting concept. I'm surprised that our new president hasn't sent Bulldog up there on a surprise visit to see what we got.
Well, he may do that, and we can talk about that.
Well, if you think, you can't expect him to be everything, okay? And, his knowledge in this area may be more genetic than adhered to by an intellectual decision. But I'd like to know what my assets are, and this guy's playing a bankruptcy. Sometime he's going to count his assets.
Right.
And that's the only thing he has is he doesn't have a counterparty obligation on it.
Maybe.
Well, let's hope not. I don't think it's there.
Yeah, I don't think it's there, and B, if it is there, whatever's there has been pledged multiple times.
Your point is well taken.
So, just to kind of wrap up on this, and again, I really urge readers or listeners to read this. I read it. Like I said, I wish I had written it. I mean, it's all stuff that we've talked about over the years. It's put together real well. But if you're weak in the knees, if you have any doubts whatsoever on gold, read this, and it'll tell you that your instincts, your gut, everything you're thinking is right. The last thing I want to talk about is something that we've been talking about, Jim, for the last 6 months or a year. Two of the paragraphs are titled, China Moving to Dominate World Oil Trade in Yuan Backed by Gold. And then the other one, China Preparing to Radically Reprice Gold Higher.
Yes.
And it just seems to me, wouldn't those two go hand in hand?
They would, and the radically price gold higher. The market mechanism will make gold go higher, but it requires a major gold entity to fix the price higher. And the radical action referred to there, whether or not John knows it, is the $5,000 bid, $5,000 offer by China and by Russia. When the physical market, due to demand, overruns the huge leverage outstanding in the paper market. So there's two characteristics to the Great Reset taking place in the marketplace. It requires Russia and China to fix it. The market will take it to the price, and the big gold holders will fix it at that price, meaning not fix it by edict, but just make one price, bid and offer.
And Mr. Hathaway continues after that by talking about the demise of COMEX and the LBMA to accelerate. What he's talking about is if gold is used as a settlement tool and is repriced drastically higher, they don't have. I mean, those are synthetic markets. They're not real.
Well, that's the beginning. In other words, the first time that transparency of the 500 to 1 or more leverage amount of paper gold written against the warehouse physical gold That's all it needs is one major failure, and then the Chinese and Russians to come out and do the bid offer thing. The reset is taking place.
Yeah, and that will get you to your 5,000 or whatever the number is bid, no offer, and you'll see COMEX prices $10 offered and no bid.
Yeah, it almost sounds like a contradiction, except we've been saying for a considerable period of time, what is a contract worth that has no ability to perform? And the answer to that is a nominal price or zip.
Right, or zero.
Yeah,
and
there's no profit in a short. Yeah, there's no profit in a short that can't deliver. So the idea that
paper profit.
But it still doesn't exist. In other words, if the contract doesn't work, the transaction never can be consummated. And
well, they'd be left with dollars.
Yeah. And it won't be dollars. The difference between 5,000 and nominal bid 10.
Well, the
reason is that the whole damn thing's on credit.
Right.
Okay. The reason for that is there is no money in those. They're just like they're better than the over-the-counter derivative where there's nothing in it. But the fight back on all of this will be violent rises in the margin requirements every day, or the day it happens, transmuting the paper markets into physical markets, because if you have to pay 100%, which infers you have to deliver 100%, there's no capacity to do that.
I was going to say they couldn't. That can't be done.
No, it can't be done, and what can't be done can't be booked, and what can't be booked isn't a profit.
Right.
So it might look like you made a fortune. I'm sure the IRS will want you to pay taxes on it, but you didn't make anything.
Yeah. Well, let's switch gears. Let's talk about the non-vote or the pulling of the vote yesterday.
Personally, I think that was an act of genius at that point, because it threw the entire matter directly into the hands where there was not one vote existing to support the bill. And that bill was not the entire plan, and it might have been a lousy start, but it became a total political football and had absolutely nothing to do with health care. And we are becoming ungovernable, meaning there is no merit to a vote, that you don't represent your constituency. You represent a swamp versus a guy with a pump.
Right.
Meaning you want the swamp to stay and stink.
Yep.
The other side wants to take away the water, so the whole thing will die and eventually stop stinking. And it doesn't matter what the vote is. It could have been on taxes. It could have been on immigration. I mean, the New York City schools becoming 100% sanctuary schools, thanks to the mayor of New York, is anarchy. When a city or a state or any entity violates federal law, what is it? Anarchy.
Yes.
And if the rule of law doesn't exist, what have we got here? Anarchy.
Mm-hmm.
Yesterday was a special day because I spent the day cleaning my guns. It was. Well, my shotgun, how often do I use my shotgun? The first few rounds are 00 buck, and the last one's the nuclear one. It's a slug.
Well, Jim, I saw the vote pulled, and the first thing that came to my mind was, because it was about Obamacare, and this is something that has been talked about back and forth, not even back and forth, but has been talked about from the conservative side for at least 6 or 7 years, to repeal Obamacare after they had the nuclear vote back in, 2009 or 10.
And the midnight pass.
But and you mentioned, well, it could have been about tax reform. It could have been about immigration, but it wasn't. It was about Obamacare. And
yes.
Obamacare, again, something that has been talked about, screamed and yelled about for 6 or 7 years by the right. Then they get the chance to vote for it, and they have majorities everywhere, and they can't get it done.
You know that there's a fifth column there.
Right, of course. I
and you know there's a fifth column hiding.
Right, led by John McCain and that crew.
Well, even closer, but planned and executed by McCain and his buddies. Right.
But my point being, basically what happened, Trump came out and he tweeted, Obamacare is going to implode on its own. Don't worry. Well, I mean, yes, it's going to happen, and if you need health care, you probably should worry. But the point being, now we have these other things. Now we have immigration law. Now we have tax reform. And most importantly, and I think the absolute core to the whole thing, is the debt ceiling, which came and went on the 15th. We have a debt ceiling now. How in the world are they going to get a debt ceiling passed?
Well, the liberals would love is no debt ceiling. But the conservatives would never let go of, even though it's totally irrelevant, is a debt ceiling, because it makes everybody think about it every once in a while.
But now it is relevant, is my point. If they can't pass the repeal of Obamacare, how are they going to be able to pass a debt ceiling?
It's going to be probably as entertaining. And I say that cynically.
Right, I understand.
As what we've just gone through.
But way more important, Jim, because if they don't raise the debt ceiling, and the government can't borrow, and they're out of money by Memorial Day, it exposes everything. It exposes that everything's broke. Nothing can run unless we can borrow money.
For that specific reason, it's going to be a joust, okay? I mean, this one's going to be a fight of fights. And there is inherent in that, as you pointed out, a distinct possibility of exposing the true bankrupt nature of an ungovernable country. I mean, think of the combinations. You and I could write up any day how to solve the health problem, because it's real simple. One of the greatest drains on it is the guy that doesn't want to pay the $20 copay. That you actually need to get rid of the insurance fund. What would you say? How about sucking on the teat of the government there?
Mm-hmm.
And there are a few other things you have to do, but you could actually create a situation where you could provide health care. You could actually create a situation where the government's problems of over much debt could and it would have to be addressed. And it seems that the art of the deal was just executed. You couldn't do it, leave it to the last minute, leave the room.
Well, and let it blow up.
That is a real possibility.
But that's what I'm getting at with the debt ceiling, Jim.
And I'm agreeing with you.
In order for the swamp to be drained, the swamp has to be totally exposed. And
that's
the way
correct.
to do that, let everything shut down. Let everything just collapse.
There's no other way to correct your a bankruptcy, then let it go bankrupt.
Right.
But you need an asset somewhere within the entirety of the entity that has within itself the capacity to restruct a going business at a different level.
Right, and that's where our gold would come in if we had it.
Well, I say that certainly has to come to Trump's attention, because he has to know if he has an asset. And an asset is not a national park, okay?
Right.
An asset has to be fungible and transferable, in order to function, to settle an exposed, transparent, sovereign bankruptcy. It would be wonderful if we had the gold, believe me. And you'd say the same thing. But
yes,
we know the numbers are wrong to start with. And that's a given fact just on the Manhattan Project consumption of gold and silver.
Right.
Because that stuff will be just fine in maybe 10,000 years.
Mm-hmm.
The argument of whether or not we have it or whether or not there'll be an audit will always keep people's minds on a topic where the most will tend to go to the government side. That's why one of the most important things that whomever has the knowledge will do very well is, do we have it or don't we have it, or do we have part of it? My feeling is it's long gone. I mean, we're starting to see now that politics is undoubtedly a career criminal act, and we're starting to see now, with any doubt whatsoever, that some of our very popular leaders are career criminals.
Right.
And to think that a load of gold would have made it over the last 50 years intact in an environment that has dead bodies behind politicians is kidding yourself.
Yeah, absolutely. There's no way the gold is there.
No, so I'd say that what you've just said is the most logical conclusion. Because if you had it, show it.
Well, Jim, this is, I get it's off topic, but it's really on topic. Let's go with the assumption that the gold is gone, and I truly do assume that. Then what do we have? We have what they call deep storage gold. If you remember back in, I forget when it was, 2002 or 3 or 4, something like that, the government changed how they were listing or naming our gold reserves, and they started calling it deep storage gold.
Yes.
Do you think maybe that deep storage gold was gold that they knew is in the ground, owned by mining companies, that at a later date would be pulled up, and the government doesn't nationalize the mines, they actually fund the mines, and they make it easier for the mines to pull the gold out of the ground. But that gold has got to be sold to the government so that we can rebuild our Forex reserves and rebuild a financial statement on a national level.
That's a really best case scenario.
Well, I'm saying as opposed to nationalizing mines, because they got to know they can't run them.
I'm not so sure they don't know they can't run them, even though history ought to point towards that. They could pay the present management and the workers' crew to continue to mine and nationalize the product. They could simply nationalize the gold mine and become the only stockholder. That's why I personally have nothing to do with the United States. I have one employee in Canada. I am incorporated in Alberta, but that could be changed in a flash. And the employees, where I'm concerned, all are of a different persuasion entirely.
Right.
and you can't have gold in the U.S. Even the product that is intended to be brought is not going to be sold, not 1 ounce. It's going to be borrowed on. Okay, that's a hell of a gamble, but I'm a hell of a gambler, and that's what I'm hired to do. But the point here is that I feel that that national gold mines, U.S. and Canada, have a risk if they're located there, and the risk is the risk of ownership.
Well, and that's why you want to diversify your mining holdings throughout the world, because truly all you need is one. Let's say that you've got 15 equal holdings in 7, 8 different jurisdictions. All you need is one of those 15 holdings to work, and
the fund will be at least saved, if not extraordinarily profitable.
Right.
But I set up my situation because I do believe physical is what you want. I made my money because I was a young idiot that didn't think he could lose. It's wonderful to be that. And guess what? I made it, and guess what? I got out. I want to do it again. If I'm to do it again, or anybody's to do it again, how do they do it? By mining it and selling it. Why do you have to sell it?
Right. When
you can get the greatest, level of borrowing, and and in a relatively low interest environment. All you have to do is have a nose for being a trader, in the sense that there might be a time when it's better to be long less than more.
Right.
Okay. But in terms of the trading, you've sliced the risk by 50%.
Well, and you become your own market maker. You become your own central bank, but you're acting as a market maker.
And if by chance you happen to own something of outrageous significance, you may become the market along with China and Russia.
Mm-hmm.
So your premise is that the ownership of the gold mine or gold product, in some sense, either comfortable or uncomfortable, will transmit itself to the federal side of major sovereigns, mm-hmm. in order to be used to balance the balance sheet of a bankrupt global problem. Mm-hmm. And in doing that, there is a way to profit, indirect or direct. And I don't want to make it complicated, so I'll stay with direct. Everything outside the U.S. and Euro interest in maverick nations with good history of maintaining people's assets even during a wartime environment, that has no bank function whatsoever. In fact, it's a refinery. They will even have a little while to figure out refineries also store.
Right.
If the company doesn't want to sell every bit it mines or wants to control its sales, it must at that point the refinery stores to the sale. Nothing from stopping them from being full storage. Enjoy yourself, guys. I'm filling your warehouse. Mm-hmm. They get a fee, but it's not outrageous at all. So all of the normal things we would have approached with traditional methods have changed. Markets are all synthetic. They're all virtual and skeletons floating in cyberspace. And the physical is the only real market in anything. And that includes oil. So the connection you make between gold and oil, in that sense, is a perfect connection. And China is the ultimate consumer when it comes to energy. Mm-hmm. And China and Russia are the primary holders of gold, because if we fibbed the United States, I guarantee you there's a lot more fibbing going on. We've already found out that our elected politicians and the art of politics and the occupation of politics is organized crime. They're looking right at it. And what they're doing right now with their complete ignorance of the purpose of the vote and simply voting party line is a further demonstration that they don't give a damn about health insurance. It's a total irrelevance. Like I say, you and I could write it in 4 pages how to have a health bill that would in fact probably work.
Don't you?
You just got to get rid of the people who are sucking on the teeth of it. You need health insurance, but not for going to the doctors for a checkup, not for the flu, not because you got a pain in your chest, which is really the taco you eat. You got to get rid of the guys that play the system. Now, some poor bastard, some poor guy gets cancer and can't afford. Nobody can afford to take care of that. You want to give somebody health? There's the guy that should get it, or a woman who should get it.
Don't you think people today, the day after, on both sides, are kind of figuring out now, after the fact, that if you want to call it a trap or whatever you want to call it, the vote wasn't about health care.
It had nothing to do with it. When Nancy Pelosi did the da-na-da-na-da-na thing, the only thing she didn't do was stick her thumbs in her ear and her tongue out.
Right.
But you got damn close.
Right.
Got to show you that this is a game, being played for ultimate power, and all it is the attempt to show the constituents and Trump that that Washington runs the show, not the public.
Yeah,
and it's going to back. And he did the perfect thing. Okay, that's what you want. Now you own it.
Yeah.
On to the next.
It up for, excuse my French, but it sets it up for the gigantic oh shit moment.
Yeah, it's coming. Believe me, they're thinking about it right now. Do you think the insurance companies are feeling any degree of comfort that are living on the federal government right now?
Right.
They'd be scared to death. And Trump played it perfect. I mean, if he had won, that would have been nice. But he won in his loss.
Yeah, and the glee yesterday that, now we're going to have gridlock. I don't think they understood yesterday, but I think some light bulbs are coming on today, figuring out that gridlock is not going to work.
Well, Hillary Trump posting that this is a great day for America,
He gets it, obviously.
Yeah, I mean this is the day that will go down in history as anarchy rules.
Yeah, I think so.
And how do you have a viable society with no rule of law? How do you put a guy 19 and 20 in freshman class who has created an illegal act?
Yeah, that's absurd.
How can these people defend them on the basis that it was consensual at 9 o'clock in the men's room?
Yeah, they're going to arrest parents. Unbelievable.
Okay. I mean, the question that was asked on Fox to the first lawyer that came in is, don't you think you're losing your soul? And the poor guy did not deny it. Okay. The first guy, the second two are all prepped and ready.
Hey, while we're getting off the subject, how about the blasphemy law that was passed in Canada yesterday?
Well, Canada, when it comes to these things, is totally wild.
If you say anything bad about Muslims, you can be arrested.
Yep, put in jail and hit with a Koran over your head for the rest of your life. It's
And Barnhart definitely should not move to Canada.
Yeah, Canada is no refuge for anything. If you can't shift your registration in a split second to where you're producing your product, and haven't already worked on setting that up, you're stupid. The key is, where is your asset when all of this happens?
Jim, to wrap this up, this week coming up, we've got options expiration, I think, on Tuesday on COMEX and on Thursday or Friday on LBMA. And historically, they whack gold.
They whack the hell out of it right in front
because of the options expiration. My thought process here is, it's possible that this week the markets figure out what we were just talking about. Basically, anarchy is here, and there
is no way to solve it. There's no motivation to solve it. Okay, there's no desire to solve it. There's no body to solve it in this type of a situation.
I'm going to go out on a limb and say, if we get through this expiration under control, this may very well be the very last expiration we get through where the physical markets do not.
Well, options are instruments designed to separate people from their money. And if the market itself will allow that to happen, it has been operated to make it happen. That can only go as long as people remain in ignorance or live in lack of commitment. That has a definable end to it. You can see it has a definable end because once they used to just take the assumption 95% of the people are wrong, and those little instruments, did very well, being overpriced to start with, and therefore ending up at a lower final settlement, either zero or just not much to talk about. So when that stopped happening, they started manipulating or influencing, or whatever you like to call it, the markets with the guts and I wouldn't call it. It isn't even guts. The absurdity of in public bagging the hell out of the market every time you came up to settlement date.
Right, and now it's become more than.
The next step is it doesn't work, and that goes along with the thesis of the leverage of the amount of paper out against the physical. It stops, and there'll be keys in the market if the operation expected this week before the settlement date or on it fails to really work as it always has. You fail to get a waterfall. It would be a strong indication that game is over.
Right.
That would be a strong indication the whole game is over.
Because it's the center of the whole game. It's a very small part, but it is the center of the whole game. There's no way.
Yeah, it's the most leveraged part. And the highest leverage exists in a wager. Okay?
Well, you couldn't have.
You see, an option is basically and publicly a wager.
Right, but you couldn't. What I was getting at is you couldn't have a strong dollar. You couldn't have basically 0% interest rates. In other words, sky-high debt prices, sky-high bond prices, unless you had grossly underpriced or undervalued gold prices.
Yeah.
And that's
gold is always a competition to a competitive currency.
Yeah, so I guess we should keep our eyes out this week to see if they can't get a smash down this week, if they can't pull it significantly below 1250, push it close to 1200, to wipe out a bunch of the options, it would in my opinion, it'd definitely be a sign that
it would be a
China.
very clear sign. I mean, that would be, to not understand that, regardless of whatever your persuasion is on the price of gold, would be idiocy.
Well, Jim, to wrap this up, again, we urge listeners to read John Hathaway's article. Wraps everything up, very well written, and you'll walk away from it feeling good, feeling vindicated, feeling you're not crazy.
And knowing that if you aren't in position, when you need it, you can't have it.
Exactly.
Okay? This is insurance where the insurance company won't sell anymore when it is most necessary.
Yeah, it's the hurricane's 2 days away, and the insurance company has shut the window. You can't buy anymore.
Yeah. It's over.
So, well, Jim, have a great weekend.
I sure will, Bill, and the same to yourself. And next time, please use a saddle so you know I don't want a bow-legged partner.
I just to clue everyone in, I was on a 10 or 12 mile bareback ride this morning, and I usually do 3 or 5 miles a day, but once you get to 10, 12 miles with no saddle, it starts to hurt.
Well, you want to have any more children, you better cut that out.
Have a great weekend, Jim. God bless the listeners. I'll get this posted as soon as I can.
Bill, thank you so much. I always enjoy our conversations.
Thanks, Jim. Bye-bye.
Bye-bye.